Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on AT&T, ticker symbol T. I think everyone pretty much knows what AT&T does. They provide cellular service to various people. It seems like a very inflation-proof, boring company that grows by a very minuscule amount every year. And I think that the company is very reliable, very large, obviously. And I think it'd be interesting to do a DCF on this company because if it is trading at a significant discount, I think that this could be a really good pickup if you want sustainable dividends. Now, it should be worth noting that the company doesn't have a ton of growth. I feel like there's a pretty low chance that AT&T is going to be able to significantly grow more than other stocks, and I think that could be a potential thing that could deter people from wanting to own AT&T versus maybe other REITs or companies that have more growth prospects with a reliable dividend. But what you need to know about this company is it is extremely boring, extremely reliable, and very simple to understand. And it's also very capital intensive, but it's interesting because once that capital is put to work and the money's put in, the stock is very inflationary proof. So whatever they pay to put up the cell lines, let's say even 30 years ago, if there's still a cell line there, that amount is going to stay static pretty much no matter what. Obviously, there's going to be recurring maintenance costs and other CapEx things for whatever maintenance that they're doing. But I think that AT&T is a very interesting stock to value because it almost should be like an annuity because it's so strong and so consistent, and you're pretty much guaranteed to get your dividend in a timely manner, but you're not really going to have a lot of growth holding the stock. Let's look at the overall stock, and then after we do that, we're going to go to our stock analysis from actual analysts, and then we're going to do a DCF of the company. So currently, AT&T trades for $26.62. It's up 58.45% over the past year, which is an extreme amount for this type of company, and that tells me that either one, it's probably overvalued, or two, it's run up too much. Now, the market cap of AT&T currently sits at $191.03 billion. The price to earnings ratio is 17.85, and the annual dividend yield is 4.17%. Moving on to what analysts are saying. Currently, analysts are very mixed, with about 21 out of the 28 analysts recommending a buy rating on the stock, 6 rating a hold, and 1 rating an underperform. The analyst price targets range from anywhere between $15.49 to $32, and the average analyst price target is $27. And I think that this is probably in line with where it should be because it has run up such a significant amount. I also think that AT&T is a very static, slow company, so you probably, if you want to get into this, you probably should dollar cost average into it. I wouldn't personally throw just a ton of money all at once into AT&T, but it does look like they've beat on their earnings over the last 2 quarters and missed on Q2 of 2024. Moving on to our weighted average cost of capital, we can see that they have a cost of debt after tax of 3.519%, and they have a cost of equity of 6.317%. One thing that I thought was really interesting is that the total debt of AT&T is such a significant amount compared to the market cap. The debt amount is 42.45%, which skews the weighted average cost of capital a little bit down. But I don't really like when a company, especially as mature as AT&T, has so much debt. But it does make sense when their cost of debt after tax is so much lower than the cost of equity. And obviously the cost of equity is being inflated by that high risk-free rate that we can see. I use an average market return of 7% just because I feel like that's more realistic than an average market return of, say, 7 to 10%, anywhere in that range. I like to go with the low ball just because I think that the overall market is probably going to have a year that's going to be bad in the future. It just hasn't happened recently, so I think a lot of people have recency bias. But from these calculations, I have a weighted average cost of capital of 5.13%. And when we actually look at the model, we can see that even with a negative 2.87% average reduction in the free cash flow over the next 9 years, AT&T is trading at a significant upside. There's 54.49% upside if we go by the amount of average revenue growth. I do think that looking at this, personally, I think that AT&T probably is undervalued at this price. It's difficult to want to invest in AT&T. The amount of growth you're going to get each year is not going to be anything great. Obviously, we can see here from my own model that it does look like it's still undervalued, even though it's run up this much. One thing I really don't like I said before, is that the average revenue is shrinking over the past 4 years. That's not a very good thing to see, but we can also see that it's very close from year to year. We can see that since 2022, the revenues are very, very similar to each other in terms of how much money they're bringing in, obviously. And the cash flows are a little bit more deviated, I think, because they're spending more CapEx from year to year. And I'm expecting that the reason why analysts, some of them, are probably not extremely bullish on this is that there's going to be extreme amounts of CapEx going back into the business, which is a significant downside to AT&T when you really think about it. Because if you're the one who owns all of the physical assets that make something like this work, you're obviously going to be valued much lower than something like an Apple with a very high margin product. So I think if you're someone who wants a little bit of a diversification of a dividend, I think that AT&T could be a compelling investment, but you should do your own research, because if we have a negative, let's say 8% free cash flow growth, then obviously there's significant downside, and that totally makes sense. And if we go to a -5, there's still upside. So if you think that AT&T can perform better than shrinking 5% on average over the next 9 years, I think that this could be a very compelling buy and a very compelling thing to add to your portfolio. Now, I do want to say that this is not financial advice and that you should do your own research, but I think that AT&T really probably is undervalued, and it might be something good to add just to kind of protect yourself, because it is relatively defensive as well, which is a plus side kind of thing going for it. Because if you think about it, people probably aren't going to cancel their mobile carrier, and I don't really think that cell phones are going anywhere into the future. Now, I could be completely wrong, and if you have the thesis that cell phones are not going to be as big of a thing in the next 5 years, I think that AT&T might not be up your alley. But I think that AT&T is probably a buy right here. I mean, just off of the model and everything like that, but it may be a value trap just because, again, the average revenue growth is negative, and that's never good for a company. I also think that when you're buying AT&T as a business, you're missing out on other businesses that are better with organic growth that's good. You're basically buying something that looks cheap. And, for that reason, that's why I personally don't like AT&T, even though it looks like there is significant upside. I just don't think that the future of AT&T in terms of growth of the revenue and the free cash flow and everything like that is nearly as secure and nearly as safe as something like a Waste Management. And if I'm taking risks, I want to get into companies that are more like an Amazon or like a Salesforce or something that is probably going to increase a lot more over time. But I will kind of finish this video off by saying that I really do think that AT&T, off of just a value perspective, is probably undervalued. That's kind of my opinion on it. Let me know what you guys think in the comments section down below. I'm very interested to hear your guys' thoughts on this, because I was not expecting AT&T with a 0% growth of the free cash flow to have basically a double the value of what it's currently trading at. And the DCF here we can see is 56.5. Let me know what you guys think. Do you guys think that it can reliably grow? I'm kind of skeptical of AT&T just as a business, and that's enough for me to not want to deploy my capital, even though I see that it is kind of an interesting thing when you find a company that looks this undervalued on paper. You kind of have to ask yourself what other things are really going on here. And I really don't like the business as a whole, just personally. So thank you guys for watching. Please hit the subscribe button. Please leave a like if you liked the video. Please leave a dislike if you didn't like the video. And drop a comment down in the comment section below of what stocks you guys want to see on the channel. Bye.